Welcome everyone to the Euro Trade on TopstepTV. My name is Marcus D. If you're here for the first time, welcome. I've been trading for 18 years and 12 years out of that, I've been trading for various prop firms. Alright, so even though I'm Series 3 qualified, just know that I'm not a CTA, so everything you see here is for educational purposes only. Bruno posted a disclaimer in chat, so make sure you familiarize yourself with that. Alright, so I did a little scalp on gold, which I got myself out of because I was setting things up and then I clicked a button instead of something else. I somehow managed to click flatten all. So we've made 19 bucks, right? So is that enough for a happy meal? Possibly. But yeah, we'll see what the day brings. We do have some numbers coming out from the Euro area in about half an hour. So we're going to see whether we can find a trade. But we do have, we actually do have some more important numbers later on. And the reason why I did the go long is because we hit the London average session range low. We have a GEX1 area at 3400s. So the plan originally for this trade was to wait until that hits. But I'm not going to chase it because, again, if you do something that you weren't supposed to do, it tends to put you on to the wrong mindset, and then you're just kind of chasing. Now you're not in from the area that you wanted to be in on. So it's best to just kind of, okay, buffer trade and move on, right? For the remainder of August, I am going to be trading super small because it's kind of quiet across the board with short periods of volatility. So keep that in mind. We do have a normal summer. This is what you can expect from July and from August. So don't be full porting. If you see very thin dome, like even on gold, you can see that the number of contracts in and around the current price, it's not great to say 4286. So to me, that would mean the big boys are away, nobody's really properly trading, and that can also lead to some exaggerated, unexpected moves that go very far away, but then also they stop immediately and then just either don't go anywhere. You're going to see a lot of partial setups, partial playbooks. So let's say if we're gonna say that this gold trade is a failed auction, I wouldn't necessarily expect it to rotate all the way back. I expect a lot of ranges to be established, especially when something sort of just jumps off the cliff for no good reason. But yeah, we open inside value, and that never really brings an easy day because you open inside value, push outside of it, and then they just kind of hang around, or they try to reverse it and that fails, and it takes the liquidity, and then it just goes nowhere. So be very, very careful, especially for this final part of August. And I mean, we even saw that in equities, right? So yesterday looked like it was going to be super nice, and then they kind of tried to go back towards value and ended up just settling. I don't have ES on my live, so I'm not going to be able to show you that. But basically, it was super quiet. I think YM did a little bit better. Let's just go to a 30-minute chart. Yeah, so it kind of pushed upside, then settled in a range for 1, 2, 3, 4 hours. It went absolutely nowhere. Finally got to closer to like power hour, and then things started moving again. So if you are going to trade, maybe try to avoid that middle of the day. That obviously tends to be a little bit tricky. And the way I've been approaching this is to maybe try one trade for London on a very small size, and then I just wait until the very last sort of half an hour to an hour of that product's settlement before I look for another setup. So that's something that's worked for me over the years during quieter periods of time. But yeah. So maybe, just maybe, let's see the calendar for today. So yeah, 10 a.m. GDP coming out from the Eurozone. That could be a nice mover for something like DAX, which we still don't have. And then core PPI. So if you're trading US-based products, that's probably going to be a bit of a mover. If it isn't, I would honestly just go and do something else for the day because it means that you've run into a time of the year when even bigger releases can't really make a dent in it. So yeah, we'll see. Let me just grab some water. Now, how is everybody doing? How are we doing in August? Paul H has a good question. Is it worth tracking the average open interest at times of the year per instrument? It depends on the context. So let's say we're going into rollover, and we're going to go into rollover for some products like crude oil, RBOB, copper. They all might be actually rolling into the next month. And during that time, tracking open interest is a little bit sketchy because partial problem is that you have a lot of people rolling into the next contract. That almost always... Christ, what's going on with my throat? Excuse me. Yeah, so... it means that the volume gets split between the old contract and the new contract. So is open interest a good indicator then of where the actual interest lies? I don't think so because of that split. So yeah, gold is rolled into December, so it's not going to roll for a while. So maybe there's a little bit more value looking at gold instead of some other products that will be in rollover this week. But yeah. There's also the options expiries that can put a wrench in the works because everybody's, rushing to either get out of their options or to get in if they're doing 0 DTEs. So yeah. Online Safety has a crystal ball. I can already see what gold is going to do. Okay, well, hopefully it works for you. Good luck. But I'm just saying be careful at this time of the year because it is a little bit sketchy. A lot of partial playbooks that start off doing something and then they never complete it. So, yeah. But yeah. Paul H says if we look at GC1 rather than the contract, well, even continuous chart, continuous chart just smushes all the contracts together, right? So it just means that whenever you have a rollover, they're going to gap because of the change in price, but it's not really a real gap because it's just like the new contract that usually in contango has a higher price. If it's backwardation, then the spot price is going to be higher than futures, but that doesn't happen all that often. So, and usually is some kind of an arbitrage opportunity. So you can use options to kind of express that. I would agree with Online Safety saying YM is a very straightforward play, but may not emerge until NY. Yeah. YM, technically this is an out of hours market for YM. And like I said, out of all the equities, if I trade London and trade equities, I would trade DAX and still waiting for Godot, waiting for DAX to arrive to Topstep. I'm trying to push for it yet again. So I spoke with a couple of people and hopefully we can maybe push that to be the priority so that us Europeans can actually have a product that counts the London session as its main session. Bizarrely, gold tends to move really well for Asia, for Tokyo. And then when London hits for the first sort of 3 hours, it tends to be a bit weird. Sometimes it has like one really good move, and then literally as soon as the initial bounce is over, it just settles in a range and stays there for 2 hours until LME starts trading. So that's London Metal Exchange. And even then, London Metal Exchange has this period towards the end of their first session, which doesn't really hit until 1:10 p.m. London time. So again, not the best, but yeah. I've been tracking heating oil recently, and I don't know why, but they seem to be really moving it, but it's so thin. It's so thin. I'm actually scared to trade it in the live because of this. So, a lot of gaps, but maybe because of those gaps, maybe it kind of just teleports to a new area if you can find a good entry. Let's see what our Bob is doing. Our Bob already rolled into October, and crude oil hasn't. I would stay away from our Bob for a while until everybody rolls into that contract, because obviously crude oil is still trading August, and our Bob for some reason has rolled already. Interesting. And that can mean very, very few people trading it. Again, you can see that on the DOM and level 2 data. So it is, it's very, very tricky, right? So even Mariano says, oh, it's been a tough week. Yeah, and that's why, you have to consider the seasonality. Now, sometimes you can have things like NQ going into a bit of a rally up to the 15th of August. So keep that in mind. Equities remained very resilient to any news, still sitting around all-time highs. So it's all a little bit sketchy. And that's why I use options levels for orientation. When you have no other references at all-time highs, the only reference that you can find is actually the open interest from the options market. A little bit tricky on something like SPY, because when you look at the options activity, the retail trading side has actually taken over in volume. So now for the first time ever in history, we have retail running the show. And that's also probably why you see some odd developments every so often. You're like, really? What's the thinking there? And it's just the 0DTs, like the gamma flows and the options flows intraday that are running the show. Is that a good thing? I don't know. It certainly brings a lot of kind of spastic movement in NQ in particular. And that's why you see so much up and down intra-candle. If you're looking at a 15-minute chart, it's almost like they're undecided until the very last moment. And then it's like, oh, it ends up as a doji, a lot of wicks, everything. It just seems like a bit of how would I call it? Blind leading the blind over there. And I'm not surprised that people can't hold intraday swings or on something like NQ, because if every single candle, even a 5-minute one, is jumping around like a bunny, that becomes tough on the psyche, right? Sam24Ticks says, hi, you do a great job with the show. Thank you, Sam. He's been trading for 25 years. So yeah, it's good to see some seasoned traders in the chat and saying that they like what I'm doing here. Thank you. And thank you for being here. I really appreciate it. He also says, I usually see you on TopstepTV if you are on during the New York session. Yeah, I'm not on this week because we have the whole VIP season 3 starting. So there's a lot of us. There's 11 coaches. There's 550 traders. So we're just kind of starting the whole process of creating the VIP account. So we've all done like 1 or 2 sessions with the team just to avoid the pitfalls that we had last time. It seems that this time around we have a lot of people eager to learn. Whereas some of the last session we had people who were kind of there for, I don't know, clout or something. It was very odd. We had a few traders that did not even read the rules of the combines and kept going in with like 10 or 15 contracts on NQ, then making like 50 grand in NQ in one day, then blowing it up, and then 3 days later, because you can still trade the blown combines, and then 3 days later they would be down like 115K. It's like, did you not read the rules? Like, what's going on there? But this time around, I'm seeing a lot more commitment. I'm seeing people who are like, yes, I'm here to learn, here to listen, being super patient. This was my trade. What do you think about it? Like, big change. Whereas last time, I think each group only had about 5 traders that were really serious. So yeah, we are growing. I think the VIP program is going to be something very, very special for the industry. It is still done as a random sort of raffle, so anyone can enter. But I think people are starting to see the value in it. I mean, who the hell does coaching service for free, And MP was very generous to run this program as a part of Topstep development for traders, and I welcomed it for sure. We're obviously still learning and still refining the process, and last time we gave everybody the accounts immediately, and that resulted in quite a number of individuals who full ported it, went into an XFA, and then lost the XFA the very next day. It's like, what are you doing? And then they were out of the VIP program. So yeah, and this time around I was actually able to do the first session where we cleared up some misconceptions. There was actually a couple of people who thought that they get 3 accounts, so even if they blow out of the XFA, they're going to get another one for the second month. And I'm like, no, dude, it's like you passed, you keep that XFA, no activation fees. If you manage to keep it through the whole VIP program, it's yours to keep. It's an asset that you can draw money out of. So, cherish the opportunity. And I think everybody's now mostly realized that it is a great opportunity, and you shouldn't just do it for the 2 free resets that come with it. But yeah, so exciting time. So I'm going to be on actually next week for fast markets. Again, not going to be trading with size because of the time of the year. But yeah, if I get some kind of a post NY cut set up from like the outer edge of value somewhere, could be good. So we're going to have the London takeover. So me and Aaron are going to be on fast markets, and should be good fun. I haven't been on fast markets for a while, primarily because they focus on NQ, and I'm not really an NQ trader, and then I would just be sitting there giving them levels that nobody was taking. So I was like, okay, let's do something else then. But yeah, I do look at ES and I do look at YM. Sam P is asking, is this live? Yes, this is live. Maybe with like a 6-second delay because of the YouTube service. So it's not like real time, but there's a 6-second delay. However, yes, I am live. I'm here from Surrey, England, coming at you. Why are people asking, is this live? Like, what is going on? Like, what? Did I enter a Twilight Zone somewhere? I don't know. So Sampi and Anna Alcantara, yes, this is live. We nearly always have a coach on. So that's the whole point of Topstep TV. We want to have these overnight sessions where at any time of the day almost, you will have a coach doing something on TV. And obviously most of it is educational, so don't just follow trades blindly. You need to have your own plan. You can definitely see how we do stuff. Everybody has their own way of doing things, but at the end of the day, we're all looking at price. We're all looking at the same price developments. And I think gold is now going into that range that we usually get around about this time. So yeah. Bruno is maybe saying that are they asking about my live account? Yeah, it's my live account. Yeah. But again, not trading super big on my live at the moment because it's August. There's no point. I'm trying to keep it super, super tight. So you can see my personal daily loss limit. I'm only allowing myself 150 per day for this time because I do not want to, be in a situation where I lose more than that in August. There's no need. And in fact, before we started running this Euro show, I used to take like the entirety of the August off completely. I wouldn't even trade. I would just go to Spain for like a month. And yeah, that would be it. But this year, I haven't been traveling for the last 3 years because of some health issues I've experienced. So here we are. We're chatting, we're bantering, we're talking about grasshoppers, we're talking about Pete the process parrot. He's around. Hold on. Should we do a puppet show? There he is. Now, I don't want to make a noise. He does have a squeaker, but I have a few dogs around me, and they always go absolutely insane whenever Pete the Process Parrot has something to say. So Pete the Process Parrot was named by Coach Hoop. I bought this little thing to tell everyone to size down, slow down, size down, slow down in the second season of the VIP. And we're going to keep Pete to remind us all when we're misbehaving to size down and slow down. As you can see, he's very sensitive when somebody starts talking about tilt and not actually doing what you're supposed to be doing. So being patient. And one of the biggest pet peeves that I have when people are coming to me scalping for dear life, like just hyper scalping all day long, clickety click, clickety click. I always tell them, you're just giving money to the market. Like you're never going to make that work unless you sit. Let's say somebody does 40 trades per day, and we have short life hacks. He is somebody who's an institutional market maker, but he automated all of his stuff, right? So that's something to consider. And when we were chatting about hyper scalping, if you don't really understand how the options side plays into market making, you've got no business doing 40 trades per day, right? Because all you're doing is just gambling. You're doing everything that you're not supposed to be doing, and that causes 97% of people in this business to lose money. That's why, because they're not selective. And then the pet peeve that I have is when I say, you really need to wait for your levels. Oh, but I don't have the patience to wait for 2R or for a good level that has legs to go to 2R. I was like, dude, patience is like in the job description. If you don't have patience, go do something else, don't trade, because it won't end well for most people. And when I was looking at the stats of all the 50 people that were in the VIP last time, all of the scalpers who were like, yeah, trade with a negative risk reward and high accuracy. And then I made them sit in one single combine for a month. Never mind high accuracy. None of them had high accuracy. The only ones that made it to the XFA are the ones who switched over to slightly higher risk reward to be 1.3, 1.5, 1.7 R multiples rather than 0.8, 0.5. Now, I'm not saying there aren't people who are able to do that, but notice that the best scalpers in the world are not going to be smashing 1 million trades per day. They find a scalp, maybe 1 to 3 trades per day. They execute. And yes, they may have a negative risk reward, but they do not sit there smashing in 40 trades per day. 3 to 5 trades maybe. But some of the best scalpers that I've seen, that's what they do. They're still selective. They just take a smaller chunk of the market, but it's always the same thing. They're either looking for absorption, they're either looking for iceberg orders, something that they can base their strategy on. And then they snipe, they get out, and then they sit and wait till they go do something else, So keep that in mind, because last time, like I said, I looked at their accuracy of all of those who claim they are claiming they're trading with negative risk reward and high accuracy. They did not have high accuracy, but they maintained the negative risk reward. And most of them were like 0.5, but then their accuracy was like in low 30s and maybe 40% in some cases. And then I had somebody who had heavily negative risk reward, like minus 11R when they would lose, but only 15% accuracy. And I'm like, yeah, you need to like re-examine the meaning of life, because that is never working. And remember that the accuracy part also is heavily connected to the trade frequency. Trade frequency. So not only risk reward and accuracy, but also trade frequency. So those three work in a very, very fine balance. Most people talk about risk reward versus accuracy, and it's like, that's not the full picture. Because even if you have, like, let me give you an example. Let's say that you are a selective trader, but every so often you lose the plot and go on a bit of a tilt. And on those days, you make like 30 trades, just clicking away in despair, trying to claw your way back to profits, and just making it worse and worse. So even though you're selective, even though you're still looking for, let's say, 2R multiples opportunities, you're trading too much. You know, the 2R multiples, if the opportunity is calling for that, because there are days when you have to modify your risk reward to 1-to-1 because that's all the market is giving you. So it shouldn't be like I only use 2R. If it's a range bound day, if it's a tight market, yeah, sure, you can take 0.8 and 0.5 because that's what the day is all about. The day type is neutral, we're very range bound, or it's just been in a range for 3 hours, you identify that, sure, you can start scalping, no problem. But even if you have the positive risk rewards, however, you don't stop after 2 or 3 trades when you're up 4R multiples, 5R multiples, 6R multiples, you want more. So you keep trading. So then the next trade, now it's no longer, a high quality setup. Now you're riding the dopamine high, high on hopium, just kind of going, yes, I'm going to make more. I'm the God's gift to trading. And then they start giving it back. Also, the mental capital tends to go after about 2 hours of staring at the charts. And if you don't take a break, if you don't walk away, then come back, that's going to hurt you. It's going to hurt your P&L. You're not making good decisions anymore, So, yeah. So we have a question about the discount codes. Why does Topstep not give any discounts? Well, here's the thing. In the last couple of years specifically, we've almost had like prop wars between companies who's going to give the cheapest, biggest discount code. And I'm not really liking the way the industry is heading. So now everybody's fishing for discount codes. Now we do have a discount code for the new dashboard. If you have never used the new dashboard, you never bought a combine, you can actually use the code -25. So I'm going to put that in chat. -25 on the new dashboard. That will give you 25% off the combine that you're purchasing with it. So it's not that we never give away discount codes. We just give discount codes when something really big is happening. For example, if we're migrating everybody to the new dashboard. And yes, before you rip into me, first of all, I'm just a trader here at Topstep. I'm a partner. Yes, we know we've had some issues, but that's always the case when you're moving an inordinate amount of people to something new. So please bear with us. Like I said, growing pains, whatever, but never giving discounts, we do, but just not very often. So that is also partly because we're becoming a brokerage and really giving stuff away. It's a bit dodgy on the compliance and legal side. So, all of these firms who are like, running all these discounts, there's going to be a point where maybe we get classified under... Now, I'm not sure whether sim trading can even come under the actual CFTC regulation, because we're really more on the side of gaming, online gaming. It's not really, live trading for most of you. But some of us who are on the actual prop desk, yes. But for most people who are in the combine or in an XFA, that's still just like paper money. But it's kind of a performance-based model. You kind of do your performance, then they judge you based on that, and you can get payouts based on that performance. But it is more akin to online gaming than actual trading, right? And let's face it, a lot of folk... they treat the combines like a game, It's just how it is. But yeah, so I'm not sure how that's going to work in the future, but just know that because of the brokerage aspect or side of things, the giving stuff away constantly, it's a compliance and legal issue. So yeah. But do we sometimes give codes? Sometimes, yes. We sometimes give free resets. But it's not going to be all day, every day, because we're not really a discount firm. We have coaching programs, we have TopstepTV, we have a whole bunch of resources where we're putting the money in different areas. Let's put it that way. We have a very good risk team that takes care of you. And even though, even I'm not a huge fan of the daily loss limit starting like it's 2015 again. But they do have performance bonuses. There's daily payouts on the live. There's like a whole bunch of stuff that you don't have immediately in the XFAs. So yeah. How's my trading month so far? It's good. Actually, it started pretty well. I have not actually had a losing day for August, but I do trade super small for August, purely because of the time of the year. So maybe that's a part of it. No stress, no big positions to consider. But yeah, so far it's going okay. July was very sketchy. July was like one loss and one win, then one loss and one win, then one just like, come on, really? And then I was like, need to go down in size. And, it's all about self-awareness. It's all about seasonality as well. And, we can't always be trading the minis because it's not always the best thing. Chef says doing discounts regularly is bad for business and user behavior. I don't know about business, but user behavior, definitely. You get a completely different crowd of people. You get people who are not really respecting the very cheap combine that they purchased, and then they just blow it up because they only spend, a couple bucks on it. So, I mean, let's face it, $49 for a 50K account. It's not exactly going to break the bank. Yeah. Sasmit says, what's with August? Why do you say time of year? Because most of the institutional traders, they go on a break. They go on vacations or holidays, as we like to say in England. And they're just not there. Like the market makers typically don't really work that much during August. Or those that do, it means immediately less size, less liquidity. And that's why all the markets are a little bit screwy and strange for August. We've had the previous 2 years that were really unusual. Okay, that was not the norm. So we had the election year, and then before then we had some post-COVID madness. So, and then this year we had some Trump tariffs earlier in the year. But then as soon as we kind of hit July, things started to slow down. And let me tell you, for 18 years, most summers are just dull. Absolutely dull. There was one time when I was still trading euro back in maybe 2010, and I was in a swing. I was a swing trader exclusively back in those days. So I'm looking at my chart, and it's like stuck at one price. So I see Coach Robert has joined us. Hey, stop playing with Muppets on your show. Why? Robert, what do you have against Muppets? I love Muppets. Besides, Danielle told me to do more of that. So go talk to Danielle. Yeah, everybody likes the grasshopper hat, obviously. We've got that too. And, when things are a little bit quiet, we have to keep people engaged. And I used to be a musician, so, being a Muppet is a job description over there. Don't move. Cavalier is walking. Okay, sometimes he steps on, because I don't know why, he likes to go behind my desk, and then he usually steps on the switch for one of the monitors, and then I lose everything, and I'm like, what are you doing? Ow. Grasshoppers if they're controlled grasshoppers, they absolutely rule. I found a grasshopper in my kitchen the other day. I was cleaning up after feeding the dogs, and my husband then suddenly went, ah! It's like, what? It's in a spider or something, because I don't like spiders, but I actually like grasshoppers, and I love toads, and I love frogs, I like snakes, and I'm a bit weird that way. I like lizards, and grasshoppers just don't, they don't, like, I love them. I think they're very cute. And I looked, and on the kitchen counter, there was a nice medium-sized green grasshopper, and I'm like, oh, like cutie, you know. So I actually grabbed it by the legs, and I chucked it out. So they are cool, definitely cool. Bruno says, Coach Robert will never admit it, but he just woke up to watch the Muppet Show. Oh yes, the Muppet Show, why not? The good news says, Dee, if you were not a trader, what else would you be doing? Well, I was a musician before I went into trading. So I actually went into trading reasonably late compared to some people. I only got interested in it when I was 27. I'm going to be 45 this year. And I actually ran my trading career, which kind of started off really not as a career, because I was just trading my own money for the first 5 years. I was literally just like, oh, it'd be nice to make a little bit of side cash. So let's try and learn about this trading thing as much as possible. But I was still an actively touring musician back then. So I was out of the country a lot. So, you know, I couldn't just sit and trade. And, you know, back in sort of 2007, 2008, you didn't even have reliable internet everywhere. I don't even remember whether we had internet on our phones, because it was not... like smartphones, they weren't really a thing back then. We were still like on like Motorola's and Nokia's and all of that. But yeah, it's certainly you know, possible to run concurrent careers. It was really only in 2012, 2013 that I decided to exit the music industry, and I started gigging super early. Like I started gigging when I was 14, because my let me tell you why. Because my dad wouldn't buy me a new saxophone, so I started playing flute when I was 9. Started playing piano when I was 4. Didn't really resonate with piano that much, but I did like the sort of wind instrument side of things, because I felt like you were playing with your almost like your entire body and the breath and everything. So I gravitated towards flute and sax, and I was really into rock and pop. And, you know, embarrassing fact about me, when I was 12, 13, I was obsessed with Kenny G. So, you know, super cheesy, but I just thought that his phrasing and everything was so cool. And then at one point I realized that flute and sax actually had pretty similar finger positions. So I decided to learn how to play the sax. And my dad had like a really old tenor sax that I learned on. But after that, I wanted to buy an alto sax, because I'm very small. And even then, you know, I was even tinier. You know, I'm only 5'1", and that's like on a good day. So I decided that I was going to get myself a new saxophone. So, you know, first I asked Dad, can you buy me one? And he said, no, go and earn it. I'm not buying you new instruments. And then I got into a band. We started doing gigs in and around the area. I'm from former Yugoslavia, so back then it was still called Yugoslavia, but I was born and raised in Belgrade, even though we have sort of like Greek and Italian blood in us. But, you know, I was born and raised there for like 20 years. And then I started gigging, started getting my own cash, and eventually I got into a kind of a semi-famous band already. Well, I mean, they were already well known. They were kind of like the Allman Brothers band back in the day, where every musician that wanted to do something session-wise, they were in that band. So that was a huge push, obviously, for my career and my status. After that, you know, bought myself the saxophone, moved to London, sort of like early 2000s, and then I had to start all over again because nobody knew me over here. And I did a whole bunch of cheap gigs everywhere, and ultimately, okay, so this goal definitely would have worked. It did exactly what I wanted it to, but hey, I flattened it too early, and that was my fault. But hey ho, good to know that at least the idea of average session range London low reversal into a failed auction, and then back up to 3,400. That was my final target. Would have worked. So it's always nice. And you see that can go into your journaling too. So you don't have to be in a trade. So if you kind of grasshoppered out of fear or out of whatever, but the trade still went to target, mark that, right, in your journals. Just say, okay, plan worked. Next time, let's try not to grasshopper out. That's how you kind of make progress in your trading. But relaxing into a trade is a huge thing that I teach people. Not entering a trade and then kind of like, holding on for dear life. You really want to have an idea of what the trade target should be. Even though some people I know don't like targets, I'm actually against that because if you don't have an exit strategy, I don't know, to me it's not really the way to do intraday trading. But hey, million ways to peel an onion, as we like to say. But yeah, so I was actually I was a saxophone player and a guitar player as well, because I picked up the guitar after a few years. Now I'm left-handed, so initially when I picked up the guitar, it was a normie guitar, and it just did not click. I also have a little injury from when I was 13. So some of my control on my left hand, which should be doing the fretting on the normie guitar, it's not perfect. But as soon as I picked up the left-handed guitar, everything just slotted into place. And obviously when you have one instrument under your belt, you can very easily transfer that to something else. And I actually believe, now Coach Robert is in the chat. He says 10 years trumpet here, 35 years guitar. He's actually a really good guitar player. Nobody knows that about him. But yeah, even he's like multi-instrumentalist. Doesn't surprise me, Robert is also a very kind of a type A personality. No, very much a type A personality. And I think most people who go into trading and technology and, and music, you have to be. But there are huge parallels between trading, self-discipline, practice, repetition, and music, and also sports, and any other high-level skill, being a surgeon, being a doctor. It requires you to specialize very, very deeply and very closely in a particular skill. So if you don't want to do that, you're just sitting there clicking buttons, again, ask yourself whether this job is really for you. Whenever I'm in a trade, I'm not really stressed out. You can probably see that more when I'm doing my end of day trades, when I'm on the main broadcast late in the day. So usually if we do lunchbox trading, that falls right into one of my highest probability setups. And if I do find a trade and then it kind of goes a little bit in my direction, then tests the entry, I'm not going, let me put the break even. I'm just like, okay, it's test of the entry. And I always allow at least one test of my entry before I do anything. If it then bleeds through, I'm absolutely fine taking that on the chin. But if it doesn't, I'm willing to kind of sit through the entry point, especially because some of the ways that I enter the markets are around these options levels and or around edges of the distribution curve or edges of the average, session range or average daily range. So some sort of a daily quantitative extreme where we expect the market to either slow down or to reverse. And that is also why I can stay in my trades for an inordinate amount of time, because I'm selective about my trade locations. So if you see me on lunchbox trading during the main broadcast, you will notice that I don't freak out. I hold trades. If I find one early, I will hold it for the duration of the segment without any panic, and JD would usually ask me, are you still in that? Are you still in that? It's like, yeah, no other development to report. But yeah. I was watching silver. Silver tends to be a monster when it does move. It can be very scary too, because it can go into a wiki mode. But let's have a look at silver actually. That's good point. So let's start on the monthly chart. Massive. See, I think silver has a better composition than gold on the massive time frame, massive time frames, because look at gold. Is this not a distribution? I mean, on the monthly, this is super painful to trade, by the way. You know, if you were holding, let's say like you hold an option, like how can you hold it through this? It's just not going anywhere. So really, I would like to see the markets moving without too many overlapping candles. So that speaks to me more as a trend. But I'm of the opinion that silver is actually too expensive. Too expensive for combines. Even micro silver can hurt you. And with silver, I don't think that tight stops work, precisely because of its penchant to just wag around like a rabid lion. But yeah, so for me, silver is actually looking much cuter on the massive time frame. I would actually argue that the weekly chart also looks less cancerous. Less range bound. Let's get rid of the domes, because I don't think I'm going to be doing another trade today. At least not until very, very late in the day. Yeah, I mean, look at this. Range. Can we say range? Obseg in Serbian. Whereas silver, a little bullish engulfing, yeah, a little bit of a slowdown, but ultimately it's got more of a trend than gold. Let's have a look at the daily. MTA, multi-time frame analyses. Yeah, again, silver, committed movement in a particular direction, making higher highs, trying to make a higher high here as well. Gold, like it's almost like it's running into a, you know, into a stop sign every so often, and then getting the direction wrong, and then going back the other way. So, you know, is this the right way? I'll make a U-turn. No, this was the right way. Oh no, let's get back on the road. And really, the target for, to me, for this move, if we actually make a decent commitment to any particular direction, is up at 34.57 on the upside. If this fails, if this is just like a squiggle before we melt through it, and remember this was a huge move down, so very frequently when you run into this first weak structure, because it is a weak structure, you expect them to reverse from it. But then if we manage to run up into the highs, if we get up above 34.25, then you're going to enter into this 34.40 area, which is a low volume area. And I would actually expect that to be taken out, so like a single print fade. Now, if that doesn't happen, and if this volume POC from the visible range proves to be too difficult, too much of a wall and a ceiling, the next stop is really 33.40. My braces are making that very difficult to say, because I have lingual braces on the top teeth. Yeah, so 33.40 to the downside, 34.60 to the upside. But right now, to me, this is kind of no man's land. Whereas silver, we have a localized supply. We have a localized supply that could be more reactive. And right now, we're seeing some of the reactions from there. Whether that holds into the end of the day, I don't know. One thing I don't like about this price action is that we pushed into the edge, the outer edge of this newly formed supply, and we didn't really react immediately from it. So that is a little bit more bullish. So that's why I'm kind of doubting this whole reversal intraday that we've seen. And typically London is not the one who creates the tone for the swing on the big time frames. It is the end of the day developments that will be more indicative of what they are doing with the price action on large time frames. But yeah, silver does have a localized supply that is not the best quality. Another problem that I have with it is it was only just one candle. So we didn't really stay away from this area for a very long time. That can be a bad sign for shorts. Not a high quality area. This one up here at 39, well, let's just round it up, 39.5. That's better. I like that more because it's got a nice follow through. And really whatever gold is doing here now kind of looks like this to me. So maybe some shorts on gold, but not on silver. You know? They are different in my eyes. One is a lot more bullish than the other. But yeah, silver can be a very good product if you have enough balance to trade it. Just don't trade it when it gets stuck in a range on a large time frame, because that is annoying, frustrating, painful. And remember, trading should be fun. If you're stressed out while trading, you're doing something wrong. You're either not creating your playbooks, not tracking your progress, not journaling, not learning. You're just sitting down, clicking buttons. And I've known people who have been clicking buttons for 15 years, and they're still, at best, scratch traders because they've garnered enough screen time, but they have not really set the math to their side, and they're constantly living in this like hopefulness that someday, somehow, magically, it's all going to click. It won't. You need to look at data, look at the development. But yeah, so we'll see what happens with this silver. We can watch it. Yeah. Let's have a look. Yeah, gold. If you don't know, Coach Robert is not a fan of gold. I can see why. Like, I know that you've tried trading gold, Robert, many times, and it is just not your product. It's kind of like me with NQ, but NQ, I've actually had success trading it. I just cannot stand the thing for some reason. That spaz price action that just looks like it's constantly having a seizure or raving in a nightclub with like a lot of strobes. I just can't deal with it anymore. I don't know, I don't know how you can, frankly. But you don't really look at it. Like, Robert, do you look at your trades when you're in? Because the only way I can trade NQ these days is if I have it on like a Haikanashi, if I'm in a trade, and just not deal with the spaz. So yeah. ADDAP says NQ has been so sideways today. Well, it is an out of hours market. Yeah. 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 So what's interesting about Coach Robert and myself is that we're on the polar opposites on styles of trading, like when it comes to execution, but we have the same levels. I'll never get over that. It's like we look at entirely different things, and yet whenever I'm like, hey, this is my EDR, it's like, oh, well, that's my top high pivot, and I'm like, yeah, because it's all math. It's all projections of ranges. However you get to a point, if you've been doing this job for a while, all of us come to the same conclusion because we're looking at the same data. We're looking at price at the end of the day, right? What do you see with gold? Well, what I saw, Princess YJ, what I saw in gold before I accidentally flattened it was a failed auction just on an intraday level after we hit, I was an MGC, wasn't I? That's where my markings are. So here is what I was looking. So we opened inside value. Inside value, so value was, the edge of it was 34.06. And then I saw this massive meltdown that hit my quantitative extreme average session range low. That is one of the highest probability setups that I have. And then it started kind of creeping back up. So I entered, I think my entry was, I mean, I can have a look at it on the chart execution side. And I was kind of setting up for this stream. So here we go. Entry was at 33.92.9. And then as I was setting up, somehow my mouse was floating on the flatten all. So instead of clicking to go to another window, I clicked out and, took 19 ticks out of it. Well, actually it was 21 ticks, but with commissions and micros, they're a bit painful. So yeah, but my idea was that we're at least going to go and test 3400s. That was my final target. And then I had to start the show, and I felt like I don't want to put myself on tilt. Because when you mess up the execution the first time around, it really puts you in a bad mindset, and you have to be aware of that. So whenever I make a little boo-boo, I just let it go. But my idea was that we are going to at least run to 3,400, and it overshot that. So again, that's a good thing. It means that the trade that I was looking at had enough legs to get to at least 3R multiples using a 40 tick stop. So yeah, and again, that goes into your data, right? You go into a journal and say, well, I accidentally closed out a trade. What was the aftermath? It went to full target and then some. Right now we're hanging around the value low. Now this could be the stopping point. We also have GEX2 level and some VWAP activities from the overnight Globex measure. So I don't know how much legs this still has, but yeah, it was one of the setups that I do quite frequently. The wrench in the works for London session is that a lot of the times you just don't have enough volume to execute those setups. Today, the sudden drop. And another thing about inside days, no matter how much they try to exit the value, most of them, especially if you've had a candle that just went outside of all the averages for whatever we were doing up until then, it tends to ping back. Now, how much is a matter of context, but on an inside day, you have more chances of it failing the auction if that kind of price action appears than it going into a continuation. Why? Because there's a take profit move, there's the inside day, there's like the market makers that will be hunting to like reposition themselves if like an outlier event happens, and this move down is definitely an outlier. So smashing into the average range, you could then call this a Frankfurt fake out as well, because Frankfurt fake out actually has about a 90-minute window when it can happen. We had the Asia low all the way up here, so that just melted through, hit the quantitative extreme for the London session, which I always do as a shortened London session because I don't want to pollute my data with COMEX. I only want to look at the ranges that are usually happening for London, and that was the setup. So it was a failed auction from London average session range low. Again, I teach this in my pro development program. As soon as we can start on module 2, level 2, I start mentioning the times of day, I start mentioning the typical trading day, start mentioning outliers, failed auctions, auction fades, which is my setup, it's my twist on Dalton's original concepts. He doesn't really talk about it, but in my commodities, it happens a lot. So you get a single direction day, then you hit one of these quantitative extremes, and then it all turns around. And yeah, that's what we talk about in the pro dev. But yeah, one of the rare occasions, so yeah, that VWAP is now giving some pullback. And I think that's probably the most that we're going to get in gold for now, until another catalyst, which should be much, much later for the PPI. And that's at 1:30 p.m. London time, 8:30 Central, I think. Is it 8:30? Yeah, no, 7:30. I think it's 7:30 Central. Yeah. Here is a very good question from Chef. Do you still journal your trades after all those years? Only if I get myself into drawdown. And that means I haven't followed my own rules, and I haven't followed my own setups, and I haven't waited. So then I need to tighten everything up back again. I then drop down to the lowest possible position size and just followed the process until I have at least about 2 weeks of following my process, being patient with levels, journaling, maybe not every day, because look, if I get to a point where I notice my discipline is on point and I'm like, all right, so I followed everything, followed the time of day, followed the levels, waited, didn't grasshopper in or out, committed to the trades, followed the immediate exit rule if it goes against me right away by a certain amount, followed the rule not to mess around with stops if everything is looking peachy, and then I just don't really feel the need. Like, remember, I'm very systematic in my approach, so when I see a good setup, I don't need to journal that. I'm not like, these saw a good setup today. It was very nice to go into a quantitative extreme failed auction that then did exactly what it does normally when I looked at it about 1,000 times before. So it gets to a point where you just see a setup, it works out, it does what it needs to do. You don't need to journal that. Had a plan worked out. Cool story, bro. And end of, right? But if you're not at that point yet, and you do find that you're like, oh my God, I did the orb setup and it finally worked. Examine that. What was different today versus all of the other orbs that you've done for the previous days? Was it just a type of a day? And was it just the case that the outlier day of just going in one direction is something that simply doesn't occur every day? And therefore, you're looking at a lower frequency setup. Full disclaimer, I'm not in favor of orbs at all. I actually am not in favor of trading the initial balance either, unless it has a very clear reversal on a 15-minute chart from an outer edge of value after opening somewhere in the vicinity of value, but outside of it. That's also one of my playbooks. But if you're not there yet, if you're not entirely sure why your setups work one day, they don't work another, try to connect some conditions around the days when they work. Like, for example, I've got to do a little bit of a criticism on the orbs that we're doing on the opening call. A lot of the times we're doing the opening range trades and it's an inside day. It's like, how's that going to work? Because now you're in balance, but you're looking for effectively a momentum trade to go for 1 million ticks. To me, that is a disparity between the open sentiment and the type of a trade you're trying to do. But on the other side, if we're opening outside of value, not by 1 million ticks, but sort of like in my experiences between 0.4 up to 1% distance from value at the open, so some kind of a gap, those are the most perfect conditions for an orb trade. So why are we not connecting the open sentiment and a potential for a gap fill, especially if it's with a trend, like equities open lower to within like 0.4% distance of value, we're under the value, yes, plow in with an orb setup. It's very likely going to go into the value acceptance with the sentiment of the overall trend, rotate through it, and then you have your beautiful orb. So I don't know why we're not doing that. But again, I'm not really involved in those kind of setups. You know, if I'm on the opening call, I will give my 2 cents. But yeah, I don't know. I tried to get them to be more systematic, and I think, Robert, you have as well. And they're just like, nope, we're doing orb every day. It's like, okay. Okay, so yeah, that's probably why I'm not on fast markets very often, because I'm very critical. It's like, Dee, stop yapping. We're trying to entertain people here. I was like, okay, sorry. I'm going to go be quiet. Doomlord has joined us. Hello. Hello, hello. Very good to see you here, man. Robert says, the battle, gold 45, Robert 0. Yeah. Shay Hughes said, so true, time for me to scale down a little and get out of drawdown properly. Yeah, you're not going to get it out of drawdown by sizing up. All of us who have been around the block doing this job for a while, we know that sizing up whilst in a drawdown gets you nothing but a blown up account. And doesn't matter what balance you have in there. Work with it. There is a diminishing return where you're maybe under 200 left on your account. Yeah, that's probably, it's probably gone because you can't trade with that amount of money left. Maybe if you, here's a tip actually. If you are going through a drawdown period as a result of August being stucky, the first step that you need to do, look at what I've done here. Risk settings locked out. When did I do that? I do it before every day. Tighten up your loss limit. Don't allow yourself to lose more than 150, maybe even less than that. Like if you don't trade a lot, if you just like look for like three to 5 trades per day, maybe even 100 would be enough, because then you have a certain amount of trades to do in a day, and you will be a lot more selective. Like let me give you an example. When I went into prop, it was 2013. You didn't have micros. You only had minis. So if you got yourself into a drawdown, and you would start off typically with a very tight loss limit before they open up the purse strings, like never mind 1,000 and 3,000, you would start off on $225 per day. Yeah, very tight. So no micros, and 225 daily loss limit. So what does that give you? It gives you about 1 trade a day. So you would have to make sure that when you strike, when you only have 1 swing at the bat, it's all equity that you have. It has to be a good one, and it has to be like a super good reason why. So that kicks off your creative side. That's where the creativity comes from. How do I make this work on 1 trade per day? So then you go into your data and you plow into data like your life depends on it. So you're like, what time of day, what exact setup was I looking at that did manage to work, and did that work for the other time of day? So then you collate and aggregate all of these times of day. How did the setup look? What level? That's how you get to your skill set, right? You don't just get, like, I think that the prop firms being so cheap, with quite a lot of leash to hang yourself with, let's face it. I mean, these loss limits, we start people on $1,000 a day loss limit. It's like, are you mad? Like, what? You need to earn the $1,000 to lose. You need to earn the right to lose $1,000 per day, in my opinion. But hey, and with micros, you have no business risking 1,000 per day at all. Now, the first thing that you should be doing, regardless of whether you're in a drawdown or not, lock your bloody risk settings up. Simple blocks. If you find you sometimes accidentally do NQ, it's like instead of M and Q, whoops, oh, no, I was looking at NQ and then I entered. Symbol block. Best thing since sliced bread. Put a symbol block. Next thing, simple contract limits. I do give myself a little bit more on M&G and MYM because I tend to not need as much of a stop. They're not as slippy as some of the other products, so I can afford a little bit more. But MGC, MHG, 1. And until August improves, until it all starts kicking up a little bit more, I'm just going to stay on that. So first thing that you need to make into your habit is lock out your risk settings. Don't be generous with your loss limits when you're in a drawdown. Put a leash on yourself. You know, like dogs with bad recall. What do? You put a leash on them. Why? Because you can then recall them to get a bicky, to give a bicky, a biscuit. But if they don't want to come, you know, getting them off leash and running around like idiots, they'll never respect you, first and foremost. And second of all, you have no way of controlling them in dangerous situations. So by, you know, putting a leash on them, you give them a chance to exercise impulse control, first and foremost. And why am I talking about dogs? Because we are mammals as well. It's the same type of negative reinforcement, positive reinforcement. So as traders, we have to have some sort of negative consequences for doing stupid stuff. How do you do that? You put a leash on yourself. Daily loss limits, symbol blocks, contract limits, they're all available now. And we have them in XFAs, combines, and in live now. First order of business, before you click a button, before you look at a chart, lock out the risk settings. Thank me later. Thank you for coming to my TED Talk. Mariano says NQ should be blocked at all times. Well, you know, when your account balance goes to, I would say about 100 grand, risking, you know, 600 to 800 on a trade, it's not a big deal. It's still sub 1%, right? But yeah, it's just that anytime I look at people's stats, I'm just like, your risk of ruin is like in the billions, and people are, oh, I keep blowing up accounts. Yeah, that's why. You need to get that risk of ruin tight with your risk model, number of trades a day that you do, match it all in the daily loss limit that is sensible, have a consistent risk per trade, you know, have some way of scaling the stops to the volatility of the product to a degree. Don't go too mad. Don't be like, oh, I'm going to use three points on NQ for a stop loss. It's like you're going to survive for exactly a nanosecond. So, you know, that's not the appropriate thing. And you can definitely be, you know, on lower time frames, but only if you're a more advanced trader. We see Doom Lord here. I love the way Doom trades. He is very controlled. He doesn't allow the crowd to kind of get him to kind of into the wave of whole bunch of opinions of when and why he should trade. And his analysis is always spot on. It's always super clear. I know exactly what he's looking for. And when I'm watching a trader, if they're just like, oh yeah, bull flag, oh yeah. It's like, just explain your entry. Oh yeah, I just saw a bull flag. But what is the actual entry type? Like, what do you want to see price action wise? And they're like, yeah. It's like, it's very, very educational. But Doom, every time he's on, I love watching him. I'll be honest. Doom, you're one of my favorite TV personalities. You, Mo, very engaging, very knowledgeable, and I love that. It's funny how different personalities give off different vibes. I loved seeing Doom smoking on TV, but there were some other people that I really dislike that about them, and I don't know why. It just makes it like, yeah, I'm just sitting here in my recliner chair, and I'm just like puffing away. But I think it's because of the way he explains things, and he's not pretentious. He's just like, yeah, I have I'm doing this, or Doom, are you trading that? No, I have no business doing that. I'm going to sit. I respect that more than, oh, look at my Lambo. It's like, I don't give an F about your Lambo, man. You can't explain the setup, right? And even if you can, just don't, I don't want to know what car you drive. It's just stupid. But yeah, so there are definitely ways to control yourself, and certain traders that we see on Topstep TV are exceptionally good at that. Impulse control. And look, we can all have Muppet moments, right? Everybody does. You never really fully un-Muppet yourself. You will always have like, oh God, why? What have I done? And why? But you can at least recognize it at that point and stop yourself from doing more Muppety things. Just go for a walk. Do something else. Go for a nap. How does Hogue put it? Have a ham sandwich. Anything to prevent you from going on tilt. Because it means that you're kind of like a 3-year-old that doesn't have emotional regulation. That's what the markets do to us. They make us revert to a childlike state, and then you're just throwing your toys out of a pram whenever a trade doesn't go your way. It's like, man up, dude. Like, what the hell? Woman up. Just do you have balls at all? I'm going to try and keep it PG. But yeah, my mouth is a lot more kind of potty mouth on off stream. Sometimes it sort of seeps in. I think when I did my own live streams, I was like effing and swearing and everything all over the place. But I tried to be very respectful here. So I hope you appreciate it. It takes a lot of restraint as well. Patrick says, hi Deeyana, how do you handle the 4-hour chart? Only asking because we have to close futures trade by night. I don't trade off a 4-hour chart. I look at it as maybe a trade location potential, but then all of my entries are really taken from about a 15-minute and 30-minute time frame. Outside of that, I will also use options levels. So let me give you a little overview of that. So let's go to the 4-hour chart here. I'm just gonna delete these intraday levels here, and I'm going to focus on the entire chart. And let's also make this a little bit bigger. These are old levels from the other day, but I do want to keep the ASR low. So when it comes to actual entries, I wouldn't be looking at a 4-hour chart and going, oh, it's a short, and I'm going to do like a massive stop. You can look at it as an assumption of maybe a direction, but it also depends when that time frame created it. So typically when you see a range, this was Asia, it means that Asia did not have any particular trend that got visible on the 4 hours. And that tells me nothing. It tells me that we're building value and we're building volume in one area. Where that goes after that is a matter of intraday levels. It's a matter of swing extremes intraday, or for the active session, like I have average session low. It depends on how strong the auction is, which you can see if you extend the initial balance, if you have single prints left behind, are we making higher highs, lower lows? Are we slowing down? Are we exceeding the range? Are we actually ignoring the average ranges and quantitative extremes and they just keep going? That also gives us data. It can give you an idea that it's probably a unidirectional day and you maybe shouldn't go against it. So therefore any pullbacks into maybe some gamma levels can give you a good pounce to continue that trend. But generally, when I'm looking at things, I look at calls and puts, open interest, so where they're located right now. On gold, we had 410 for the put support from the end of day trading yesterday. And they're end of day levels, by the way. And I put them in on this chart, put them in as a white line. So that would be a former put support. Yesterday, we were using this 410 as like a middle of the middle. So the entirety of the day was just wagging around the put support. So it was a tricky day, but towards the end of the day, I actually did manage, very late in the day, I did manage to find sort of a post-settlement long. And I thought to myself, this is worth a few ticks. And then it actually did manage to go into a little bit of a move. So that was in this candle. But on the 4-hour time frame, the only thing you want to look at is whether you have a quality supply or demand that has some space to it. So what do I mean? Well, if I look at this whole area, that's very messy, right? So this would be maybe either an accumulation or a redistribution. We don't know which. It's not going to tell you it. The whole range-bound situation on the longer time frames in gold is also not helping, but it is the summertime, and this is perfectly normal, especially for August. So one thing you can do is to look at the 4-hour chart and then identify the range in this case. So that will be, here's the low, here's the high. Unless you are at the edges of these, in a range-bound market, you have to go down to intraday levels. The 4-hour chart is not providing enough information, okay? But if I then go, okay, I know that's my high, so maybe let's just make that into a red line. No, that's confusing. Maybe make it into blue for a range. And then do the same thing with this one. Actually, easier if I just delete that and drag it back up. So that's now a range. Let's lock that up so we don't move it as we move through the time frames. So the first strong level in options is a put support at 410. Where are we right now? Below it. But you can see that on an intraday time frame as well. Now, when I drop down to a 30-minute chart, you know that you have the edges of the range from a 4-hour chart in blue. But it's in the middle, right? You can't trade from a 4-hour chart. You have to take 4 hours as context, if any exists. And in this case, the only context is it's a range. So not much to glean from that. Everything else is down to your ability to identify the open sentiment for that session. Are we opening in balance, out of balance, and by how far? Those are 3 questions that I ask myself every day. And then depending on where the price opens, I have some setups that will be more probable. Like, for example, today, the probability of price returning to value was more in play because we opened inside value. So then they tried to smash it, and contextually smashing it in one massive candle that completely obliterates everything else is usually a not good thing for a trend day. In fact, what typically happens with those sorts of candles is that they frequently grab liquidity and then come back for a mean reversion. So are you a mean reversion trend? I'm a bit of everything, but if I had to just gun to the head, like, what are you, D? What sort of... I'm a mean reversion trader. That's always been my strongest skill. Over the years, I've learned how to trend trade. Over the years, I've learned how to do range trading, but it took me absolute years to get there. And I had to work on each of those very systematically. I'm still not great on trending days, I will be honest. In theory, it's like caveman trade, like close your eyes and buy. I call it the point, click, and pray PCP trade. I do believe that's still in Glossary and Topstep on TopstepTV website. So the PCP trade for me, very uncomfortable to this day. And unless I have a very good level to fall back on, usually something in options, I'm just like, oh, trending day, these are my Achilles heel. I probably shouldn't be doing it, but I'm going to try anyways because it is a trend. And, we all have our strengths and weaknesses, and being aware of them is very important. But let's say put support is there. Let's have a look at some other strong levels. Do I have any other strong levels? Not really. Like we have a put support at 410. The rest of them are areas that could be reactive, but they have less open interest than the ones that are located at calls and puts. So those three would be GEX1, GEX2, and GEX3. So GEX1 at 3,400, GEX2 right here at 3,405, and then really nothing until 3,380. It's like massive drop. If it starts to drop again and it's COMEX, I would say that we have a very good chance of dropping from through 3,400 all the way down to at least 3,385. Let's not like nitpick. But that's like the average daily range coming into play. So that's again quantitative extremes. 3,380 is where the next ADR is located. Lo and behold, ADR exactly. So there's a full hour, 24-hour average daily range line. Lo and behold, it's right at the bottom of the range. So that's possible. It is possible. But if we go higher, I would need to first, for the best option possible, and I don't think it's going to do that, I would need COMEX to open above 3,413, quite possibly for the best sort of open day above value. Really, I would want to see it open at 3,426, then to retest value high, and then to bounce from that for a continued move up. So really, that will be a breakout from the range, and we keep going. I don't think that's happening. So today, I think unless we have PPI as a huge catalyst, I think we're still going to stay range bound. But those are your points. That's how I would use the 4-hour chart in case of a range. If it's not a range, let's find something that is actually trending. So let's see what crude oil is doing. And again, a whole bunch of levels. All my scribbles from like 2-3 weeks ago. All right, so that's a bit cleaner. 4-hour chart, what do we have? Not much. Let's see if I can eke something out of this. Where did my volume profile visible range keeps disappearing? Where did it go? There it is, okay. So what do I see here? It's a trend down. Like, if a blind person can see that. But we do have a supply on the 4-hour chart up at the point of control from the volume profile. So that would mean if we get there, not chasing up to it, not interested in it. Why? Because it's a downtrend. But if we get up to 64 and get up to that supply on the 4-hour chart, that would tell me to not look for breakouts, to not look for longs. Basically, it would tell me there's a supply here, there's a volume point of control. It's going to take some time. At the very least, it's going to take time to break through it. But more often than not, if the run up to that area is pretty sizable intraday, there's all probabilities on your side that we're going to make a U-turn. So that's how I would use the 4-hour chart in intraday. Not for trade locations, but for a I see that Bruno has actually pulled up the glossary. Yes, it's still there. It's quite funny. Yeah, so but just to basically get an assumption about the direction. And then you go into the zoomed in intraday levels, anything options wise, quantitative extremes, maybe even the profile area from yesterday or the previous day. It depends how far we are, and that provides me with context. That's how I do things. Yesterday I had somebody who's an ICT trader who accused me of being too complex, and I'm like, really? Really? An ICT trader coming in and telling me that I'm too complex with my like 4 lines on the chart. It's like, okay. Go trade the PD arrays and SMTs and a silver bullet and like so many things in that methodology that is ultra confusing for everyone but the devotees of ICT. So yeah, I don't think I'm complex. I think that every piece of the puzzle serves a particular data information. Does that make sense? But yeah, Bruno has told me that PCP trade is still in the glossary. So here it is. A trade you feel you have to enter regardless of price action. PCP stands for point, click, and pray. Trend days might be a day to PCP, but be careful not to fall into FOMO. Very glad that I coined that. I first created that when I was doing a long form video on my channel, and I started it by welcome to the Grasshopper Clinic. And then I mentioned PCP as one of the issues that people struggle with. And I was on this was like nearly 2 years ago now, so I was just on fast markets. And yeah, we started joking around that, and it made it into Topstep Glossary. So it's there for everybody to read. All right, so we got 2 more minutes, guys. So I didn't want to do another trade after I decided to grasshopper out by accident. But yeah, we'll see what the day brings after PPI. So far, I mean, really, I'm seeing maybe natural gas moving. Gold kind of moved, so let's say gold moved as well. Platinum, range bound, ferociously range bound as well. Heating oil, again, it's like, I don't know why they move it so much. I'm going to have to maybe I should do like a whole combine, just doing heating oil to see whether there is something there. And I might get just like a 50K to get proof of concept. Because I haven't really traded heating oil too much. I traded RBOB, I traded crude oil for 12 years. But then when crude oil went a bit dead, I focused on RBOB, which is like an exaggerated version of crude oil. Because it's a byproduct, right? So it's a finished product created from crude oil, just like heating oil. So they are the raw material, and then you have the actual final product. That's why they're so connected. But I just wonder whether I can kind of make that work. I do need proof of concept though, so this is why we do combines. If I want to trade something that is connected to my my market, but I haven't really had much data on it, because it's been moving for London as well. So I'm thinking, could be an alternative before we get DAX. DAX. Right, okay. That's all for today. Hopefully it was educational. Don't forget to hit the like on the way out. I do appreciate you spending time with me. So, yeah, let's see what PPI brings. As always, keep your grasshoppering tendencies in check as best as you can. And, yeah, Paul H. You're, again, there's a reason, Paul, I have you on the stream, because you look at very similar levels and you call them way before they appear, which is, a part of creating a good plan. So, yeah. Anyways, thank you for joining me here. This was very fun, as always. You guys are the best, guys and girls. We have probably the best chat ever. No one's ever too mean. And it is very good to not have the stress of trolls coming in every day and going, you suck. So yeah. Doomlord says it was great. I like taking a combine to test stuff. Thank you for the kind words and the nice stream. Doom, thank you so much for joining me. Maybe one day if you're awake, I know it's really early where you are, but maybe I can drag you on air. It'd be cool to have you, and maybe they can forgive us. You can smoke, I can vape, just for that one stream. Anyways, I'll leave you with that. This was the Eurotrade. I'm Marcus Talker D. This has been TopstepTV. Enjoy the rest of the day. Thank you. Take care.